Hey guys, Bryan Lebo here with your Las Vegas market update video for October. Today, we're going to cover the normal metrics such as the notice of default or foreclosure activity, current inventory levels, and then break down the current inventory. We're going to look at last month's sales numbers compared to September of last year, and then cover the recent news topics within the last month. So let's get to it. All right, first are the NODs or notice of defaults. We monitor these levels because this is essentially our magic 8-ball, which illustrates how many actual foreclosures we can anticipate on seeing in the future. As you can see on the screen now, last month we had 874 NODs filed. Now that's better than August, but still less than we had in July. Ultimately, it's safe to say that we won't be seeing a flood of foreclosures anytime in the near future. Next, let's talk about the current inventory levels. This is the most important metric right now. The higher the inventory, the greater the supply. Now, the greater the supply of homes become, the more prices start to fall if buyers or demand doesn't increase along with the supply. As you can see on the screen now, we ended the month with almost 8,000 homes on the market. Now, what's really disturbing here is that our inventory levels have increased for 21 straight weeks. Basically, a 23% increase in only 5 months. So we're now adding more homes than we can sell every week for the past 5 months. This is never a good sign. Okay, now let's see what our inventory actually looks like out there. At the time of the shooting, we have 8,089 homes on the market. About 13% are short sales, 4% are foreclosures, which leaves 83% of the market as normal or, traditional sales. Now, this is fantastic. Just don't forget, we have about 54,000 homes still not paying their mortgage. Eventually, we have to foreclose or short sale these 54,000 properties. Now, let's take a look at last month's sales. Last month, we sold 2,230 homes. This was down from 2,400 in August, but really, that's supposed to happen as we wind down the summer season. The bad news is that even though we sold 2,230 homes last month, we sold 2,506 homes last September. Simply put, sales were down 11% last month. Now, that's certainly not good, but considering we lost most of our investors, it's certainly not devastating. While everyone can pretty much agree that prices have plateaued and in some cases gone down dramatically, I was really surprised to see that the median price actually went up, just marginally last month. We went from 2 months in a row of a median price of exactly $200,000 to $200,970. Okay, only a 0.5% increase, but it's better than the alternative, right? All right, let's move on to some news. Now, the big news this month was about HOA foreclosures. I might do a separate video at a later date to explain this more in depth, but for now, here's the gist of it. HOAs have the legal right to foreclose on a property. Typically, the HOA will foreclose to recoup the dues that it lost and or so they can legally maintain, an eyesore of a property. Years ago, nobody bothered buying these since if you did buy one, the actual bank who owned the first mortgage would simply foreclose within a couple of months. But since the foreclosure process now takes years, some savvy investors decided to buy these $5,000 liens and just rent out the properties until the bank finally foreclosed. They buy the lien for $5,000 and rent a luxury home out for, $4,000 a month. After 2 months or so, it's all profit, right? If you can manage to make it a full year, the typical investor can net about $40,000 just by renting out a property they paid only $5,000 for. Well, one group of investors argued that the banks had no right to foreclose on them since the HOA foreclosure, or super priority lien, actually superseded their first mortgage. Now, as absurd as this sounds, it's actually legally accurate. Well, they tried their luck and lost in district court. After losing, they appealed to the Nevada Supreme Court and won last month. Now, these guys claim to have over 300 of these types of deals. So, if you figure that they paid $1.5 million in HOA liens to collect 300 homes, and the average value of these homes are about $500,000 each, this means that their investment of $1.5 million made them, wait for it, yeah, $150 million just overnight. Yeah, let that sink in for a second. So as a result, overnight, many investors became theoretical millionaires. Now, HOA liens that used to go for $5,000 are now going for like 80% of the home's actual market value. Talk about a game changer, right? Well, people worried that banks would boycott Nevada since we appear to be completely out of our minds. Realistically, I don't see this having any impact on lending. The reality is this. The Supreme Court's opinion is that the bank should have been more responsible about not allowing the HOA foreclosure to even occur in the first place. Essentially, the bank should have been responsible for the owner's lack of payments. As a result, I would imagine that most lenders will now impound association dues into your mortgage payment, so that way they can ensure that the HOA dues are actually being paid. Now, it's a crazy story, and how and if these investors can actually sell these properties now will take a little bit of time to actually unfold. But nonetheless, I don't see it affecting our market very much. So let's recap what we learned today. We shouldn't see many foreclosures on the horizon. Supply is rising while demand is falling, but prices seem to be in a holding pattern for now. Well, personally, I think we're in the 9th inning. I can show you subdivision after subdivision where prices are down from 6 months ago. I can show you many neighborhoods where there's over 10 homes for sale with only 1 or 2 homes under contract. Too many sellers are so overpriced, it's not even funny. Ask any agent or buyer what they see out there, and you'll hear that all we see are price reductions and homes sitting on the market. Now, realistically, price is everything right now. I just listed a home for $800,000 and sold it in 3 days. Why? Because the marketing was flawless and I listed it for what it was actually worth. And buyers came out in droves since it was a home that they could actually feel comfortable putting an offer on. I listed another for, $229,000. That house sold in a couple of days as well because the last home, just like it, had sold for $225,000. Then I have homes that are literally just rotting away because the sellers want, 10% more than the last guy got. The moral of the story is that at some point, sellers have to get realistic in this market. Assuming your home is marketed properly, if it hasn't sold in the first month, baby, it's simply overpriced. The market is changing, and it's only a matter of time before the news media starts portraying this shift. The first honest article I've seen was in Vegas Inc. magazine, which I'll put a link to in the description. It actually depicts how depressed the new housing market really is. They're the first that I've seen to mention price reductions on new homes and how the market locally is actually underperforming compared to the national level. Now, I've been reporting this for months, as you know, but this is simply the beginning. Once this hits the local news and publications with a larger following, it could spell big-time problems. So to wrap up, if you're a seller, make sure your agent is marketing your property correctly and make sure that you're priced accurately. Now's not the time to be greedy. If you're a buyer, exercise patience. Don't let anyone rush you into buying since there's really no need to. Take your time and find the right deal. Time is vastly on your side. Now, thanks again for watching, everyone. Please click here to subscribe and have a fantastic October, everyone.